till 10 p.m. in London when we're looking at the markets. Uh, if you have any questions or so during the presentation, you're most welcome just to put them here in the chat box. Got some big moves in the market. Shanghai Composite closes down some 7% or so, 7.7%. At one point, though, it was down with about 8.75%, and it hasn't really translated into a major move in Western stock markets yet, but it could do so at one point. Because there is some correlation between these markets. I did an article about the Shanghai Composite not so long time ago that we were looking at the Shanghai versus other markets. And again, the correlation is not extremely tight, but there's definitely some directional correlation there where you see, Shanghai stock market going up and the rest of the world goes up and vice versa. So there's a bit of a gap here, and it's definitely interesting to keep an eye on this one. So why is it really like that? Well, I did an article about this and I can send it to you guys in the chat now so you can check it out. But it's quite straightforward. You see, the Shanghai Stock Index was closed. They closed on January 23rd for the celebration of the Chinese New Year. And from that point all the way down here, many different things have happened. And I think most significant one is that on the day of the closure, on the 23rd, there was only 629 confirmed cases. And I remember at the time, already 629 was considered to be quite big. But from January 23rd until February 2nd, the numbers had risen by 27 times, from 629 confirmed cases to 17,200. Obviously, that's a strong move. And as I said before, some people say, that this is probably going to be, it kills less people than the normal flu. So maybe the world is just exaggerating here. But what they're not exaggerating with is the fact that companies and people in China are taking it very easy. People have stayed at home because of the risks involved, and the Chinese government are telling certain companies not to open up for production yet. So it's effectively it's going to be losing a month or so of productivity. It's already been at least 2 weeks, and there was some estimations, and they said that if the market, or if China continues to be sort of quarantined and not continues and doesn't go back necessarily to work, then that will shave off maybe 2% from the GDP or the potential growth that would have been. So that's quite a significant amount, and that's having a direct influence on things like the Aussie stock market, which we have covered in the past in form of this inverse and shoulders, but also, of course, that influences the Shanghai Composite. Now, let's see what happens if we just focus on the Shanghai Composite for a few more minutes before we continue. This is an index you can't necessarily trade unless you're based in China or have some very good connections with people in China, some brokers in China. So it's not accessible for the retail public in, say, Europe. There's other things like China A50. But if we just look at this, it's a very significant slide. And most of the time we tend to close gaps, so we don't tend to have these huge gaps in the market. And we also know that the Central Bank of China is injecting about 175 billion US dollars into their system. So I reckon that if we can trade above 27,011 by tomorrow, over the next few days, if we don't get like a decent close below here, we could probably go up a bit, and that could easily influence some markets to go up as well, like European markets. And then we'll see what happens. I think realistically, if it continues to go bad, it will go up, and then it'll probably go down again and sort of linger here. And if we take out this low here, we'll probably go down even lower to the 2,620 level. As well, if we fast forward, now things are looking slightly better. So the growth rate of number of confirmed cases from February 1st to February 2nd is approximately 20%. and that is much lower than the typical we have seen in the past, which is closer to 35 or so. Still, though, if the growth rate of confirmed cases continues to grow with a 20.2% growth over the next 14 days, there will be 228,000 confirmed cases of the coronavirus in China. So it's quite likely that this can turn still a bit more crazy than it is right now. But it's good to see that the growth rate is starting to diminish. And I think when we start to see this diminish a bit more, maybe 10%, ideally like less than that, single digit, I think that time is probably time to sort of start to get ready for maybe stock markets moving upwards and higher. And just now it's still not possible to say that this is where everything is good, but it's definitely a significant reduction in the growth rate, which is something I'm watching. Okay, so let's take a look now at the other markets then, and we'll actually start with the Dalian, because this is the Dalian, and the Dalian is at, pretty much moved down and went to this little buy spot. Now this is a buy spot according to technical analysis. The chart doesn't know that we're in the situation we are in. What we've seen so far is just this negative move here since then. And if you think this is it, that was the highest amount of growth rate we're gonna have in the coronaviruses, and you don't think that we're gonna have more spreading for the rest of the world, then maybe this is it. Then maybe this is time to get involved. And in that case, down here between 108.10 and 107.64 is the time to buy something like the Dalian. If you're more like me and you think, all right, this can actually still turn a bit more crazy, then you would probably not be buying here until you start to see again the growth rate of the coronavirus slip lower, which wouldn't be unsurprising. And the reason for that is that people have been indoors for at least almost 2 weeks now, and that's sort of the incubation period. So if you stay for another two, if everybody just stays indoor for the next, say, 4 weeks, then obviously you will probably have actually make it 6 weeks or something like that. Then we would have reduced the risks of spreading this even further. So things will come to an end the way it looks like it, but I'm not sure exactly when, and I do think we can give it another day or two. And that's why I'm waiting. But if you're bullish, then this is the time to buy. If you are looking at the Euro USD, I think the Euro USD was going down for many reasons, but we do know, for example, that inflation is probably not going to pick up. And we did have some comments on that today from ECB members in the morning. They say the inflation is probably going to remain around the same lows for the next 12 months. So I do think that can continue to be the case. And I do think we can continue to see this continue to go lower. And I haven't changed my bias. As you know, we said look to sell here, wait to go down. I said look to book all of the profits down here, or half at least. But I said full at least 2 days in a row. And then we're pretty much back up here. And obviously it went straight into this high. So if you waited for some sort of bullish confirmation, then you probably didn't short until we're up here. If you didn't, and you shorted from here, again, I think we can just wait. I think we'll probably attack the lows again. If not, this is just going to translate into a big rectangle pattern. And if we break below the low here, this is actually going to be quite interesting because there's going to be a massive one here. You can almost argue it is one already now. Depends on how you interpret things, but you can interpret this like a triple bottom, right? Definitely you get yourself a triple bottom. And then you have that move here. And what you would do here is you consider this a false breakout, which it just sure looks like it. So I definitely think we're going to go lower, and something I discussed in the Q1 report as well. GBP versus the USD. So this one moved up quite significantly, and I did a report on this one on Friday as well. There was end of the fixing and end of month fixing in as well. We had the break from this triangle. Now triangles are notoriously hard to trade, but we're back at the buy spot area where I would be looking to get involved here. Now for some reason everybody's sort of deciding to sell today. I'm not really sure what's happening. I do know we had manufacturing numbers out, but they were the final numbers. So they printed 50 versus the 49.8 preliminary, which is not bad. I mean, it's good. Is it great? Zero growth, which is what 50 is, or stable growth? No, but it's better than zero. All right, so this is under some severe pressure right now. It's 10 a.m. in the morning. We don't have a single bullish candle here, and there's no single bullish candle here as well, so I wouldn't be buying here on the spot. But if it does manage to trade above 130.50, which is my trend funding level, then we could potentially bounce. What I did here is I just take a fib from these levels, and this is the third fib, and we should not really trade this low if this is a genuine uptrend. If it does slide below it, it'll probably slide a bit lower to 130, 30, and then we'll see what happens. It's obviously not good from a triangle perspective. This should have just gone down here, bounced from the 50 spot, and then gone up. I did not really want to see the price trade below 30.71. What else? Crude oil markets, definitely bearish in the short term. What I done here is I tightened up the trend defining level, and if you look at this from a big picture perspective, we're just above that important low here, and as long as you trade above that low, there's a possibility we trade upwards. I think the market is trying to bottom out like it did here, and maybe here. It's in this sort of messy period, but you can see how the highs will become lower and lower and lower, and it is possible to short sell at 53 and then attack the low again. But what I would do now, and what I'm looking at, is I'm effectively just keeping track of these highs, okay? And then soon it's going to be that one. So I think I'm going to go up and then down, and then we'll take the trend defining level, make it here somewhere, and then when we take that out, we can probably do something like that. Now, if you're very, very gloomy, or you, for other reasons, you think we're going to trade much lower, then 50.45 is the key level. This is a nice little triple top, and then you have 1, 2, 3, 4, about 5 lows around that level if we include today's price action. And this is a big, huge rectangle. Now, if we trade below it, this could potentially trigger further moves to the downside. And it wouldn't be strange, really. It would just be on the back of the news. And it's not just this, it's natural gas. Take a look at natural gas. So you got natural gas, let's see if I can find it. This is natural gas. Natural gas had have significant declines lately. Fib, where's that fib? This one here. From its high, it slid some 35%. The reason for this slide is that you have frackling, which is obviously the new way of extracting crude oil. As you might remember, when they introduced frackling, crude oil prices slid to 37 or something like that, if not lower. And what's happening here is when they looking for crude oil with the same method, what they will find is that they're going to find natural gas, but that's not really what they're looking for. So they're actually burning off flaring because it's so busy in these terminals that manage natural gas that they can't manage it, and to get rid of it, they need to sell it at a negative price. So they have to pay to get rid of the gas. That's how lowly valued it is right now. And natural gas is used for heating and many different things, and it's also something that could replace crude oil as well. So we are having a big shift, a big change in the energy markets right now. And I'm not an expert, but if something is very weak like natural gas, then I do think it could potentially influence crude oil prices and maybe put pressure on this as well. So if we take out 50.45, that would not surprise me a bit. And I do think this could be interesting because we'll break this big range and we can potentially go lower. But as I said earlier, keep an eye on the highs. 54.44 is trend defining level. Might go up, might go down, and I'm just tracking this because my default view here is that we're gonna break to the upside. Now today we're gonna take a look at the Dow as well. I'm gonna look at the German DAX, but let's take a look at the German DAX first. So remember when we had those initial sell-offs, I said you can sell up here with stop up here, and then we tighten this up and tighten this up. And when we were trading down here, I said you can book half of it, if not all of it, okay? And we slid all the way down to support. So if we still kept on and held on to that short, I think this would be a great opportunity to short sell. Now here we have an interesting scenario as well, because you remember I was treating this section here like a rectangle. Now this is not a perfect rectangle if you put the line like that, but you can consider this a false breakout, and a false breakout from that rectangle, and that means you treat this still as some sort of rectangle. And the reason for doing that, it just gives you a rough estimate of how low the price could go on taking out 12,872. So this is interesting here if we take out that level, and potentially some people might sell with stops just above this high here, which seems to be the high of today. That is interesting. And again, if you think, you know, coronavirus, we've seen the peak, there's not going to be too much more on that, then this is the spot to be buying. Later today, I'm going to do an update on the CNN Fear and Greed Index. I use that to try to determine where, if it's time to turn long-term bullish or not on the stock markets. Last time I checked, it was not the time to turn long-term bullish. Today we're going to cover the Dow Jones instead of the S&P 500. And I found this interesting because you have this massive head and shoulders pattern, and if I remember correctly, I did write about this as well last week. Oh, spelled that wrong. Can't spell today. There we go. So I did this article about the Dow Jones. I'll send that to you guys in a minute. So here's quite interesting. Firstly, you got the central bank balance sheet. So remember, they were doing the reverse of, they were calling that the reverse of quantitative easing, which is called quantitative tightening. And remember, when they did quantitative easing, which the ECB is doing now, the market soared because they were injecting money to the markets. Now, this measure was contracting, so the central bank balance sheet was contracting. And then here, they started to pump money in, and that had to do with the repo rate issue, where banks did not want to lend money to each other. People say either one of the banks was was in serious trouble, and that's why they don't want to lend, or maybe some other panic thing, or maybe just there's not enough liquidity in the market now because of regulatory requirements. Maybe the truth is somewhere there in the middle. What happened though is that the balance sheet expanded massively, and you can see how the stock market has risen. Now you can't really see it properly here, but I saw it in a different chart. The balance sheet has not been expanding lately, and so it's quite interesting to see how the stock market rose from the balance sheet expansion, and when the balance sheet has now stabilized, the Dow Jones as well has started going upwards too much. And then you have, of course, the coronavirus, and then this is a head and shoulders chart that I actually published last week. So you give yourself a head, left, right shoulder, and when I put in the article, as I said, to break to 28,000, not 28,000, but 28,500 something below these lows here would trigger that decline. However, my preference is 28,372. So that will be, okay, let me see. $372. So that was the break here. So if one shorted on the back of that, you'll be in a bit of profit. There's so many different ways, unfortunately, to work with this one, but you can work with the corrective move to sell here. It is also possible to just short here. The third option is to short here with a stop just above the high. The fourth option is if you really are bullish, it's just to go long and just look for this to go upwards. But if you do want to buy, I would probably buy the German DAX, because the German DAX is just above its trend defining level. Okay, let's see if you guys have any questions. Now we're gonna wrap things up. So in the chat box today, we have Maurizio and Antonio. Good morning to you guys. We also have True Invention. True Invention says, China Central Bank injected liquidity to the market. What do you think about that, especially about the impact on gold? Good question. I mean, and I forgot to cover gold, so let's actually take a look at gold. So gold is a bit lower today. So every time a central bank tries to stabilize the markets with pushing money, it will sometimes push gold upwards, especially if the American central bank is doing it, because gold is primarily traded versus the dollar. And when you lower interest rates, it becomes, or pump money into the system, it becomes usually cheaper to borrow money. And the idea is, of course, that ultimately you're going to have some sort of a bounce in the market and stabilization in the economy. So that can have a bit of a negative impact. But if you look at this today, there's not a huge impact. In fact, there was some numbers I didn't really fully understand, but they're supposed to pump in like a huge amount of money, but there's also supposed to be other repos that are going to be reversed and effectively expire today. So the net injection is not as high as it looks like. And long story short, we just looked at the Shanghai Stock Index, and you can see that it has not been a huge influence on the number of on the Shanghai Stock Index. It's not higher, right? So I think that we wouldn't worry about it too much. The only time you're gonna get worried about gold is if you think, well, the world is gonna become a better place from today, and if you really think so, then yeah, look to buy. But as you can see, you got the Dow Jones pretty much about to break. You still have the corona infection roaming. You look at the numbers from the UK today, 50, which is not good really, if you think about it. As well, from Germany, manufacturing PMI was 45.3 versus the 45.2 projected and the 45.2 prior. So German manufacturing is contracting. And for the whole Eurozone, the number is 47.9. So it's not looking very, very good. Of course, things could be a bit contrarian, but I think, at least for now, that we're going to have more pain in the market. So I think stock markets will come down a bit more. And I think in general, I will be bullish gold. The gold was going up as well way before the coronavirus incident. And we have a bunch of patterns here because, and as well, this was very boring for many years. When a market is boring like this, it tends to give you some massive moves afterwards. Remember Bitcoin, right? Massive moves, then very, very, very quiet, and then finally you start to have a breakout. Now, for gold today, you might remember when we're down here, I said, look to profit up here. Pretty much reached that target. Here as well, I said, look to buy here and profit up here. So hopefully you're able to capitalize on some of that, booking half, if not all of it. And I reckon if we go down again, and I do think I'm probably going to increase this tomorrow, but I'm going to leave it like this to now. But I think if we do go down to 1568, I think people are going to be buying here again. And if it stabilizes above this high today, I'm going to push this up, and we're probably going to just look to be bullish from 1574 tomorrow, and the trend defining level is probably going to go probably just below this level here because it's looking good, and I think we can trade upwards, and you can probably head higher over the next few weeks and months. Remember, 1,700 is the next long-term target. Okay, so we're going to wrap things up. Guys, thanks so much for joining me this morning. If you do have any questions for me, you can always reach out to me via Twitter. Remember though, I have many times, I have same access of information than everybody else has. Sometimes people ask questions that I can't answer. But I'll do my best to help. As well as, I have that WhatsApp channel. You can use that if you want to, where I send you this video. You can add me here. Just know though that this is my personal channel, and it's not sort of supported by, not supported, but it's not sort of, it's a different feed effectively from InvestingCube and ATFX, so you're fully aware of that. I share my market updates, a few charts, and interesting articles, and so on and so on. Okay, guys, we're going to wrap things up, and I want to thank you so much for watching today, and I'll see you guys tomorrow. Don't forget to click on like the video. Just push it forward, you like that, and then click here. And I hope to see you guys tomorrow around the same time here on InvestingCube.com. Thank you so much, and have a great day. Thank you, and bye-bye.